What's going on, everybody? D Murray here again with another video. And it's going to be a quick video. I don't want to speak too much. Somebody had just asked me why I share so many strategies, and I had tried to show them that, the market condition is different every day, every week, every year, right? Every 3 months or so. Um, so I told them, depends on what the market is showing me, depending on the market condition. And then I had a cousin who asked me, how to restructure the correct way. And I explained to him the best way to do it. And I was thinking in the midst of it, like, why not just put this out on YouTube where I share all my free content anyway? I normally put everything on YouTube only because at the time of me joining or learning how to trade, had once upon a time decided not to, seek uh seek training or seek any mentorship from anybody. I wanted to learn by myself. And in the midst of that, I have seen so many market conditions and I have lost tons and tons of money. But also, I feel like I'm getting to a level now where I'm more consistent and I understand truly which direction I need to be trading. So, going back to the start of this conversation, I just want to show you guys how to read structure the right way. So, jumping into it, right now, let's just start with euro. So I'm gonna go down, and then we'll look at some of the faster pairs as far as gold and US 30 real quick. So the quickest way to do it for me, right? So zooming out, I like to hit right click and reset the charts, right? I do this on daily, reset the chart, grab the vertical line, and I just put it back here somewhere, right? So now I know I want to pay attention to everything on this daily from this line here to current. Really, you want to do this before the week starts so you can understand where we're headed. So I'm gonna take this off. So now I place my vertical line and I'm gonna jump to the weekly. So now I know on a weekly, I just want to pay attention to this information. Now we know in the market creates higher highs and higher lows, right? So what I want to focus on is the lowest low, and I want to focus on the highest high, right? And I'm not truly a big fan of wicks, and what I have seen that wicks can sometimes give you false information. So I like the opening and closes of candlesticks, especially on higher time frames. So I now know that this market pushed from here all the way up here, which shows me that one of these bullish candlestick, either here or here, they're opening. Look like this one is lower. So this bullish candlestick right there is what caused this big jump. So I'm gonna mark it off with a blue. Let's make that blue horizontal line. And then once we got up here, we can clearly see that it was this bearish candlestick that drove price down. So I'm gonna mark it off with a red horizontal line. So now I know I'm gonna just mark this off. This is where blue started to drive, and this is where bearish stepped in the market. Boom. So, and this is the opening price of that bullish candlestick, and that is the opening price, that bearish candlestick on a weekly chart, right? So that's all the information I need for now. Now what I want to do is grab a Fibonacci and start it from that support, going all the way up to that resistance. Right now, let me change this because I don't want you guys to be confused on this color. I'm gonna just make it neutral. Let's just make it black. Boom. So now I made the Fibonacci black, and this Fibonacci is different, right? I don't have the normal Fibonacci. I just have quarter marks, right? It keeps everything even for me, right? Everything is even. So I got the quarter marks, 0.25, 0.50, 0.75, a dollar, 0.25. So that's the Fibonacci. And I call it the bigger overall Fibonacci, right? So on smaller time frames, I tend to make this wider. I put it on so it'll look bigger on that. So now that I got this information, I got the support, I got the resistance up top. I know eventually we either going to push back to this 25 or we're going to push back to this 50 because it's an uptrend. So a good pullback would be 25. You can kind of see it already. It went to the 25 and started going back up. But I'm gonna show you how to catch these weekly swings in between, right? So I'm gonna go down to H12, but really back to daily. H12 is a custom time frame. I kind of use it on forex pairs, but on like gold or US 30, we don't have that time frame. So I can't, you know, on gold and US 30, it moves faster. So H12 kind of looks weird. So I tend to go to H12, or you can either go to H4. Doesn't matter. Now what I want to do is pull out another fib, right, in between these levels. So I was started from that bearish, right? This was that bearish candlestick on a weekly, and I just want to go down. Really, let's make these thinner, right? We want to make these thinner, and we go to the 25 level, right? So here, boom. So now I have the big overall fib, which is the thicker lines, right? We see the thicker lines, and then I got it the in between fib, which I only went one level from that bearish candlestick to the 25 on that bigger. And now all I want to do is just trade in between these levels, right? And if we just pushed off with the bearish candlestick on weekly, we know eventually we want to start selling down to the 25. So we got some pullbacks. You can basically see structure from here, right? You can kind of see market broke this line and fell down to the next, right? And the in between, got to push at the, got to push up at the 50, right? Could have been taking trades from here to there, and got a double top up here, right? Boom, retest that same area and melt it, right? So what I wanted to show you guys is how to restructure on any pair, right? If you do it the right way. So now that we're on H4, I'm gonna go to H1 because I like H1 as my main time frame. I'm gonna zoom out just a little bit to see more details, right? And what I like to do is turn on this weekly and daily separator because I want to catch a week's worth of candlesticks. And when you do so, you can clearly see these orange lines are showing me what the weekly, basically what the weekly candlesticks are doing in between those lines. I mean, obviously you see one candlestick for the weekly, but you go to H1 and see structure. It gives you multiple candlesticks, which makes up that 1 week's candle. So all I do is just go back like here. I'm gonna delete some of these arrows because these arrows look confusing a little bit. Boom, boom, boom. So now we can kind of see. So this area here, oh, this area here, from here going down to this close, this was that first weekly candlestick that closed bearish. So like here, you see that that was the first candlestick, or that was the highest high, right? If we're looking at the weekly structure going all the way up, that was the first highest high bearish candlestick. So now when I go here on the H1, I can clearly see that all of this was a bearish candlestick on weekly. And we're pushing off the 100 mark, going back to the 25 mark on the overall big fib. So now I just have to, what do I do? Wait for a break and retest, break, retest, actually retest it twice, and I take the sell, boom, to the next level. That's how you take weekly swings, man. And I'm sharing this content for free, man. So boom. So now I got a 1 to 2, right? Risking 480 pips or points, however you want to look at it, to gain 968, right? 1 or 2, risk to reward. Could you have got a 3? Yes, you could have got a 3. You might say a no, because that, but look, boom, if you take it early, boom. Now you got a 1, boom, right before, because you can kind of see like it spiked up after hitting that area. So now I got a 1 to 3, or just play it safe, right, with the 1 and 2, risk to reward, boom. The next week, you kind of see like it started like in the middle of the week, so I probably would have left it alone, but you can clearly see how we pushed up, we broke, retested, went to go smack for the double top at the top. So you could have took buys here, 1 or 2, right? It's easy, simple, risk to reward, boom. Overall, we know we have to touch this area of 0.25 on the overall bigger fib, right? So like the next week, if once you understand it, you can clearly see we was trending up. Structure got broken here. Boom. So when this week start, we broke through that structure point, right? And if we start to break up that 75 mark on the in between fib, we take the same trades. 1 and 2, boom. Got a big push at the 25 mark down here. Take the buy. Like I hate to say it, but it's really that simple. You got trades everywhere, but that's how you weekly swing. If you turn on like a moving average, I'm pretty sure a good moving average would help you stay on the right side of the market. Let me see. 66 moving average I have on. Boom. Clearly can see it. Look at this. Before this week started, after this orange line, you can clearly see we're trending up under the market. Sales is literally telling me why would they break through that EMA so hard at this point when we've seen a bearish weekly candlestick coming here. So I'm selling. Here we're above the 66 moving average. I'm buying 1 and 2. We're up under the 66 moving average. When we hit the 75, I'm selling. Continuation, brown, right? Got a big bounce. Boom. We only took that buy, even though we're up under the 66. We only took the buy. Why? Because we're at this overall key level on a bigger fib, which you could just mark it off as a support already. So once we get down there, we're buying anyway. Here, we're above the 66 moving average. Got the rejection here, right? Reject. We broke and really didn't get the retest, but if you confident, like myself, I take risk, take the buy, got the 1 and 2 again. Next week, could have done the same. Yeah, we broke up under, but we retested this area, right? Why did we retest it? Because we broke here, but we never came back to retest any of this area, right? We got the bullish candlestick that we wanted to see. And like I said, that's just setting a buy limit at that point, especially since it's rejection of the 66. Could have set a buy limit, but even if you didn't take it, because we never got the retest, boom, now we're here. We got the retest. Boom, take the buy. 1 and 2 risk and reward. The next week, you kind of see from structure, boom, 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 big break, right? Big break instruction. So I'll call that just the retest to continue in these buys. In order to stay in a buy trend, we would have to break this, retest that, and continue to go. But as you can see, what's been happening this week, we can clearly see that this week came down to retest the 75 again. To stay in trend, it would have to continue to back up, but it didn't. It broke. Hard break, and also breaking a 66 moving average. Everything in me is telling me to sell this market. Boom. What do I aim? The normal 1 and 2. So this 1 and 2 is going to be helpful. That's how you play it safe. But eventually, like I said, if you want to start getting all of your money's worth and getting these crazy risk reward, could have got a 1 and 3 TP hit, boom, or which is crazy. You could have got a 1 and 4, right? So if I'm risking $1,000 in this red, I'm gaining 4,000. Or if I risk 100K, I now made 100,000. So I just wanted to show you guys that. So take advantage. I'm gonna run through some more, and you guys will be able to see it.